Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the biggest stock market myths. I'm giving you the 5 biggest myths that people have when they come into the stock market and trying to understand it and things. And this is video 1 on the new 3-part series I'm doing this week, which is breaking down the biggest myths on the stock market, which is today's video. Tomorrow I'm going to break down the biggest myths about personal finance. And then the last day I'm going to break down the 3 biggest myths on starting a business and entrepreneurship. So let's go ahead and get into this today, guys. Number 1 myth out of all of them is that you are at a disadvantage as a small investor. This could be so much, this isn't even close to being the truth, guys. This is such a big myth that so many people trap into. If you're a small investor, you're at a disadvantage to the big guys, you know, the ones that are running those big hedge funds and whatnot. No, absolutely not. You are not at a disadvantage. You would actually have an advantage. You have the advantage over them. I'll give you a few examples. One, those individuals that run those big funds or have tons of money or whatnot, they have so much money to invest that they can only invest in certain companies, which is another reason why Warren Buffett's returns have gone down as he's gotten older and older, even though he may be more intelligent, may have more wisdom, those kinds of things. But his returns have gone down because he has to invest so much money into one company that he has a very small amount of companies he can even invest into that would even be worth his time. Because there's only so many companies that are that big that you can invest hundreds of millions, if not billions of dollars into. Whereas us as small investors, you know, regular people, we can invest in any company, literally any company, because we're investing thousands of dollars at a time, maybe tens of thousands of dollars, maybe even hundreds of thousands of dollars, which is still super small amounts when you're talking about the stock market. That's not even going to move most stocks. So our gamut of companies we can invest in is so much wider than theirs. Another reason why this is a huge myth is because when you're a regular person, you're more likely to do regular people things. You're more likely to be intelligent as far as a consumer goes and those kinds of things. If you're one of those people running one of those huge hedge funds or you have tons of money, you're in like a separate class, and you're like in that little bubble of eating $100 steak dinners and only doing things that the super rich people do, that sometimes you don't even know what the trends are. Unless you see a paper or a report or something, you have no clue. You don't know about this stuff until it's already been published in the paper and it's already been published in graphs and all these things. Whereas if you're a normal person, you know trends. You can see, you know, oh, that restaurant chain's doing really well because every time I go there on every Tuesday with my family, they're packed. You know, that's a good company. You know, we can see trends before they can see trends because, like I said, they're just in their own little bubble. They're in their own little world. They drive their kind of cars. They, you know, they live in their kind of houses and their kind of communities, which is totally different than what a regular person is doing. So you have a huge advantage there that you can see things way before they ever get to see them as far as trends go and all those kinds of things, guys. Those reasons are why that number 1 myth is the biggest myth by far. You have actually an advantage over big fund managers. Number 2, you can't become a millionaire from the stock market. This is absolutely a myth. This is absolutely a myth, guys. We broke down the chart last week on the video I did, which was called How Fast, or something like How Fast Would It Take You to Become a Millionaire in the Stock Market? And basically the chart was we assume we put in $10,000 the very first initial investment, and then we put in $10,000 a year. And it was something like after 25 or 30 years or something like that, you were a millionaire. You had over $1 million just in the stock market. And that was getting only an average return. So that was assuming you did the $10,000 initial investment, you added $10,000 a year per year into that account, which is a realistic estimate for most people. And then assuming that you only get an average return and you still reach millionaire status by, you know, time you're 45, 50 years old if you started in your early 20s. So that whole myth about you can't become a millionaire in the stock market, it could not be further from the truth. And then imagine if we amped those numbers up and we said, okay, instead of $10,000 a year, we'll put $20,000 a year. Instead of an 8% return, we think we're going to do better than the market. So we're going to get a 12% return or something like that, guys. You know, those numbers would have changed drastically. It might have been 10 or 15 years till you reach millionaire status. So that is absolutely a monster myth, guys. You can absolutely become a millionaire in the stock market. You got to minimize losses, and you got to do at least as good as the market does each year or a little bit better, and you got to funnel money into that account, and you will definitely become a millionaire in a lot faster than you think. Number 3, You need a high IQ to be a good investor. You need to be really smart to be a good investor. Once again, it could not be further from the truth, guys. Investing is two things. One, an IQ can help you on the financial side. You got to understand income statements, balance sheets, cash flows. You got to be able to read through companies. And if you have a little higher IQ, it can help you as far as reading through companies and retaining information. But that's only half the problem, guys. So number two, what's the other part of it? Making a gut decision. Making a gut decision, guys, that business you're getting into is gonna grow in the future. You believe in their management, making gut decisions, making business decisions, guys. That's what business is. That's why I preach entrepreneur on this channel, because it'll help you a lot in the stock market, understanding that, because you got to realize a lot of investing decisions, they're business decisions at the end of the day. They are gut decisions that you have to make. And sometimes they're not made with your brain. Half of it's made with your brain. You got to understand income statements. You got to understand balance sheets. You got to be able to read through risk factors and remember those and retain those and all these different types of information and whatnot. But also, you don't need a high IQ to make great gut decisions. A person that has a 90 IQ versus someone that has a 110, just because that 90 is a 90, wouldn't say they're a worse investor. They might actually be a better investor sometimes than the person with the high IQ, because the person with the high IQ might just bank on, oh, I understand these financials, and this makes financial sense, this makes paperwork sense, but maybe that business is actually about to become a declining business. Maybe it's going to have a declining business model. Those are the type of things that numbers don't sometimes say. So, guys, high IQ, it means nothing in this game. It means absolutely nothing. Don't forget that. Number four, some people come in the stock market, and sometimes when they're around other people that are making money in the stock market, they come in and they think it's going to be super easy. Literally, some people come into the stock market, and if they're around people that are making money, they're like, oh, that's so easy. You just put some money in a stock. Oh my gosh, it's so easy. You make, $1,000 today. Oh, you made $10,000 last week. It's so easy. Absolutely not. Absolutely a myth, 100%. It is not easy. You need to do the work. You need to read through the annual reports. You need to Google the news. You need to keep track of the company here and there. You need to look through tons of other companies. So when that company that you're in becomes overvalued, which at some point it may, you need to get out of that and get into another company that's undervalued. So it's a lot of work, guys. It's no doubt about it. It's certainly not like overwhelming amount of work, but if you think it's just easy to make an 8%, 10%, 15% return per year? Absolutely not. It's not easy. It does take work. It does take a work ethic and all those kinds of things, guys. So it's not easy. That's a huge myth that some people come across. Generally, ones that are around people that are making money in the stock market. Just like, okay, if you watch the Olympics, right, and you see Michael Phelps out there swimming, a lot of people are like, oh, how easy is that, man? Swimming around in the pool doesn't even look like he's going that fast. If I practiced at that for a couple of years, I would be in the Olympics too. Yeah, and then you race Michael Phelps and you realize it's not that easy, guys. So generally from the outside, it looks easy, and then you actually experience it and you're like, shit, this is kind of harder making money in the stock market than I anticipated. Number five, there's another myth that if you want to be a great investor, you need to focus on it full time. So you need to quit your job or doing what you're doing, because that just paying attention to it all day long, every day, that's your work, that's your job, that's going to help you become a better investor. This is absolutely false. I'm living proof that this is a false premise. I thought this, guys. I really thought this. I did like 30 to 40% per year for 4 or 5 years straight. And that was while I was working full-time, 50 hours per week for a company. Then I decided I was going to leave that company, and I was like, man, if I'm getting 30, 40% a year and I'm working my ass off doing a job for someone else, I need to just retire from that, and I need to focus full-time in investing. Well, what happened is I realized I actually got worse as an investor. I got much worse. I became a horrible investor. I lost a lot of money because what happened is I had a lot more free time on my hands watching stock prices all day, and suddenly I became like an urge to trade more often, like get in and out of stocks more often, focus more on margin. I got on margin accounts, those kinds of things, guys. So just because you got more time on your hands doesn't mean you're going to become a better investor. Like I said, with me, I became a much worse investor because I was focusing so much on day-to-day stock prices and needing to make moves. Oh, I should probably trade today because, I haven't traded all week, and, I need to do something. I need to make some money somehow, and because my stocks didn't go up this week. So, I'll try to do a short-term trade here and there. And it became a worse investor, guys. So you do not need full-time. you can just do it at night. Spend an hour or two that you might be vegging out on TV or vegging out on doing whatever you usually do. You spend that hour or two extra at night focusing on companies on the weekends instead of just pulling weeds all weekend and cutting your grass or whatever. Spend an hour or two on your iPad or your Mac or whatever and kind of research some companies. That's what's necessary, guys. Spend a few hours a week trying to research companies, and that will get you to the promised land as long as you do a good job and you have a good gut instinct. You're a smart business person. You'll make the right decisions, and you'll make money over time. I hope this helped you guys immensely today in understanding the 5 biggest myths of stock market investing. If you're watching this today and you have not subscribed, you may want to talk about personal finance in the channel. Talk about entrepreneurship. I'm an entrepreneur and I give entrepreneur tips on this channel, and we talk the stock market so many times each week. Thank you for watching, guys, and have a great day.